It was a record day on Wall Street, kicking off what will be a huge week for the market. Magnificent Seven earnings, the jobs report, and tensions in the Middle East all are expected to move markets and influence the Federal Reserve's next rate decision. Also this week on Wednesday, the market is pricing in a pause, with some saying a soft landing may have already been achieved. Our next guest says that line of thinking is too hasty. Let's bring in Victoria Billis, Banrion Capital Management Chief Investment Strategist. Victoria, it's good to see you. Maybe just to start here, we've been talking about different different headline-making events, Victoria, this week. I want to start on earnings, though, and we're waiting for big tech. There, I'm interested, Victoria, so far during this earnings season, interested to get your take. What have you heard, and what do you make so far of what companies have been reporting?
Yes. First off, thanks so much for having me, Josh. In terms of earnings and reportings, I'm very bullish on what we're seeing in terms of the tech companies that are coming out right now. I'm very, particularly, we've been following a lot of the larger sector headlines in terms of technology stocks that are releasing. But I think one of the main focuses that I'd be interested in talking about today is not just how markets are doing overall, but also personally, just kind of how we believe that the Fed is going to be impacted by some of the market movements that we're seeing, if at all.
So what do you think? We were talking about this a little bit earlier in the show, Victoria, that our question, and really Josh's question, was sort of, are we going to see Jay Powell come out and try to tamp down some of the equity market enthusiasm when we hear from him this week?
So I think that that's definitely some of the sentiment that we'll be seeing from the Fed and from Jay Powell this week. A lot of market sentiment particularly has been around rate cuts and the necessity for that to kind of tamper down some of the CPI or some of the kind of consumer-based enthusiasm that we're seeing. But I think one of the other key aspects that we need to keep in mind about why exactly I think, for example, rate cuts may not necessarily be in the future of the Fed is that for the most part, based off of the macroeconomic data that we're seeing, things seem to be a little bit under control. Yes, we do have some very high CPI numbers at play, but so long as we continue to see inflation coming under control on top of that full employment, I don't think we're going to necessarily see that rate cuts that investors are really looking forward to.
And Victoria, we're talking earnings, we're talking Fed. I also want to get your take on geopolitical risk. Right now, the market seems to be taking all that very much in stride. I was just wondering, your take on it. Do you think the market's being too complacent about it, Victoria?
I think it's not necessarily a complacency. Good question. I think that a lot of the factors that come into play when we're talking about geopolitical factors, a lot of things that come into play is particularly around I'm seeing war, or if we're looking at, for example, what's happening in the United States with interest rates and things of that nature. What's happening in Israel and what's happening in Ukraine definitely is impactful to a lot of machinery or war-based stocks that we're seeing. So whether that's Raytheon or things of that nature, those are definitely companies that I think are kind of becoming winners when it comes to kind of the geopolitical tensions that we're seeing. And if we're thinking about, for example, more of those financial macroeconomic pressures, I think a strong dollar, a strong U.S. economy is always beneficial to overall markets. And it's clearly starting to reflect a bit in what we're seeing in terms of stock market rallies. But, I think we're in for a shock once the Fed makes their announcement, once the Fed starts to chime in or tamper down some of that later on in the year. And then also, if we're thinking about international markets, what's going on in China right now, particularly with the liquidation with I'm blanking out on the name right now, but basically the largest housing, largest housing manufacturer in the entire country. I think that a lot of that tension has been priced in when it comes to real estate markets, because a lot of their particularly smaller competitors essentially anticipated this, or this has been a rally that's been going on for 2 years, but that can still kind of come back to bite a lot of the real estate market and real estate manufacturing market, not just in China, but also may have a spillover effect here in the US as well.
And Victoria, I know you're also looking at small caps, which is something we've been hearing from a handful of investors as of late. What makes you confident about that group right now? Because they have been sort of volatile and a little bit more volatile than the broader market.
So my overall, I would say, enthusiasm around small cap stocks is that they tend to outperform when markets are kind of coming up from what we would call a downturn or a downswing. Between 2022 and 2023, we were seeing a lot of market tensions related to control of inflation from the Fed. And so we had a lot of growth and like high tech stocks that were and particularly like the Magnificent Eight that were soaring over the past couple of years and benefiting off of this very high interest rate environment. That is something that particularly does not fare well for small cap stocks or value-based stocks. But now when we start to come back down, or like again, that growth momentum movement is starting to tamper down a bit more, this is the time when value-based stocks start to really benefit, because again, once we're really starting to kind of like get out of that swing of the bearish market that we were seeing, and now I would say it's more of a bull market with what's happening in the U.S. economy. This is the time when we see small caps, small value kind of fare a lot better versus the traditional growth stocks.
Victoria, it's going to be a big, busy week. Thanks so much for helping us think through it. Appreciate it.
Thanks so much for having me.